The US government just borrowed $500 billion in the last 30 days. The AI market has a crap forming underneath it, and almost nobody's talking about this. Gold just triggered a warning signal that only appeared twice in the last 20 years. And in the last 11 days, the Senate votes on legislation that could reshape the whole future of crypto. Most people are watching this right now, but most are completely unprepared for what could happen next. I need you to understand something. Each one of these four signals has a deadline attached to it. July 29th and August 7th. They are not distant problems that may matter in 6 months. They are developing decisions and market signals that are developing over the next 11 days. The question is simple. Will you be positioned to react when the market changes or try to catch up later? Signal one, the AI boom has an energy problem. AI companies are buying more chips, building more data centers, using more computing power than ever before, but the electrical grid is not expanding fast enough. Think about it, a massive build out without the support to keep it running. Eventually, something breaks. The compute side of AI is growing rapidly. Energy side is falling behind. I've studied this pattern, and I know this kind of imbalance does not resolve quietly. Signal two, the United States is borrowing money at a pace they cannot keep up with. The government borrowed roughly $500 billion in only 30 days. It's not normal spending. This is warning that the financial system is becoming increasingly dependent on new debt just to keep going. Imagine somebody using one credit card to pay another. Yeah, that works temporarily, but the interest keeps growing, and eventually the payments become impossible to ignore. Now, this is the direction that the company is moving towards now. This is much bigger than just a normal recession coming. The real issue is whether debt, interest payments, inflation, and slowing growth can continue at this rate. And the last signal, signal three. Gold and silver triggered a rare market pattern this week. July 29th is the confirmation date. Most people assume that when the gold rises, that means investors are scared and looking for safety. But that's not always what the market is saying. Sometimes gold can rise just because investors expect inflation. Sometimes it can rise because people are losing confidence in the government. Sometimes it can rise because large institutions are preparing for financial stress before the public even knows what's going on. Now, if this pattern confirms on July 29th, I don't believe that it should be viewed as a normal safe haven signal. I believe it should be viewed as a warning, and most investors may be reading it completely backwards. Signal 4, August 7th. The Senate votes on the Clarity Act. This legislation could finally create a clear market for XRP and the broader crypto in the United States. For years, large banks, investment firms, major corporations have been on the sidelines, but they hesitating to move deeply into crypto because the legal rules were unclear. They didn't know which assets to be treated as securities. They didn't know what was going to be illegal, what was not going to be illegal, or what rules regulators would choose to enforce later. Clear rules change all of that. When institutions understand the rules, they can invest more money, build more products, and anticipate without fearing that the government will suddenly change its position. That's why August 7th matters so much. Now, let me explain who I am and why showing you this matters. Marmana Pantoja, futurist, asymmetric investor, creator of multiple exits. I identified Palantir at 6. I identified NVIDIA at 80. I'm not here to sell you excitement. I'm here to show you what's buried in the data before it becomes obvious to the masses. Because by the time everybody else knows about it, the best positions are already gone. Now, here's the part nobody else is talking about. These are not four separate stories. They are one story. The AI problem begins with the Power Triad: compute, data, and energy. AI needs all three. The chips provide the compute, information provides the data, electrical grid. The electrical grid provides the energy. And right now, compute is expanding much faster than energy. At the same time, the government's borrowing a ridiculous amount of money. And also, this is all connected to what we're seeing with gold and silver. And while all of this is happening, massive amounts of institutional money is waiting on the sidelines to move into crypto. One thread, but there are four signals in a specific window of time. Tonight, I'm going to show you what an asymmetric opportunity is, where the danger is, and what investors should be watching on tonight's episode of Strategy Sunday. Let's get into it. Hope you guys having a great day today. Hope everything's going good. We got a lot we're going to talk about tonight. We got an AI crash that's forming. We also have some recession fears that's starting to keep people afraid. I'm getting a lot of questions about all of this. We have about 500 viewers on YouTube, about another 560 on various streaming platforms. But the first thing we want to talk about tonight is the AI crash and what will survive the correction. Now, there's a lot of people out there talking about the AI crash. There are AI stocks are falling. We saw some significant we saw some significant pullbacks over the last couple of weeks. Valuations are compressing. Investors beginning to question whether this whole AI boom was just another bubble. But you know where I stand on that. I believe that the market is completely wrong about this. I think the price of AI stocks and the long-term demand for AI infrastructure are two separate things. I think that any pullbacks, any recessions in any AI stocks, especially the leading ones, is an opportunity. I believe a correction in valuation does not mean that the technology has stopped advancing, but it does not mean that data centers are going to stop being built. All of these things are going to stop happening, or the electric consumption is going to suddenly decline. The weakest companies probably won't survive. I've been saying this for months, but the main players, the big players, any pullbacks is an opportunity, right? And the most overvalued stocks may continue to fall, but the infrastructure underneath, that's what the whole Power Triad is about predicting the winners based on infrastructure and what's needed to progress. So the real question is not whether AI is crashing, it's whether or where you can position and what survives the crash and where capital will flow next. We're actually going to talk about all of these things in the conference, Future Wealth, December 4th through 6th in Miami, my flagship conference. First time I'm doing it this year, but it will be every year. Now, remember, let me see. The AI can it need to reduce the quality to 1080? Yeah, maybe I do. Let me see. How did I fix this last time? I forgot how. Let me see. I fixed it last time. Let me see how. I forgot how I did it. I turned something off, but I guess, let me see. Let me reduce the quality. Let me see if I can reduce it. Let me switch. What I'm going to do is I'm going to switch off everything else other than just YouTube. So if you're on another platform, click the link and just come over to YouTube. I'm going to take everything else off. That's probably why I fixed it last time. So I just got to turn off all the other streams. Give me a second to do that. And we'll keep going. I believe that's what it is. Yeah, so I have it streaming on multiple places. That's why I want to just stick to YouTube, because it's a lot easier just in one place. So from here on, it should be okay now. Because I had to turn off, it was streaming in multiple places. Now it's only in one place. But back to what I'm saying is the correction was inevitable. Remember, AI valuations were high, and I've been talking about this. If you come to any event that I've had, and I want you to, if you've come to the events, you've heard me say it, I want you to put it in the comments. I've always said that bubbles happen from humans. Greedy humans come into a situation, want to make money, and they push valuations past where they should flow, where they should go. That's normal. That always happens. But what I'm saying is that people confuse bubble with or speculative bubble with the technology is going to fail. And that's very wrong to think like that. Resets always happen, but that does not mean the technology failed. It's failed. It means that the market temporarily overpriced the opportunity. Monetary dips does not change the overall macro trend. Every major technology revolution experienced corrections, failed companies, spending slowdowns. But what we see, productivity gains from AI and robotics are so big that the overall trend that we're seeing is still upward, right? And I want to talk a little bit about that before we move into the Power Triad and other stuff, is that a lot of people misunderstand AI. And we want to get a little bit technical right now. And I want you guys to give me some, tell me in the chat and all this other stuff, because I want to make sure we have a two-sided conversation here. And please like the video if you haven't done so. If you haven't already subscribed to the channel, please subscribe to the channel. But I want to have a two-way conversation here, because a lot of people don't understand what AI even is. They believe that AI is ChatGPT or Claude or generating videos or images. So a lot of times when I've seen, I deal with a lot of people. I speak at conferences. I talk to a lot of people in the crowd. And I hear people say, we don't need AI. What do we need AI for? And I want you guys to understand this, because we're going to break this down right now, what AI really is. AI started in 1956. It's been a discipline that's been around for almost 80 years. I've been in AI since I was in college. I studied AI in grad school in 2009 to 2011. I'm actually not caught up as much as I should on Claude and all this other stuff, but I did study my degrees in computer science. I studied a lot about AI early AI a long time ago. And AI is much more than just Claude or ChatGPT. It's much deeper than that. It's a replacement or augmentation of the human brain. It's a lot bigger than just generating images, funny videos of fruit people dating. I don't know what the heck that was, but whatever the new trend is. I don't keep up with the trends. Maybe I'm getting old. I don't keep up with all the trends no more. I saw some fruit people online dating and kissing, and I was like, oh, this must be some AI generated stuff. But I'm sure that was a trend. I don't know if it's even a trend no more. But a lot of people, the average person sees these AI generated videos. And I also saw another report that said about AI is about 8 to 10% penetration in society. It means about 90% people have heard about AI, but they don't use it, not directly, maybe through apps or maybe in the background, but they don't use it directly. So they think AI is that. It's generating images, pictures, fun stuff, but it's a lot deeper than that. AI can solve, remember, capitalism can get in the way, but if capitalism is not getting in the way, AI can solve AI and quantum computing, I would say, will solve every human problem we have. And I'm going to tell you why. I'm going to just tell you one problem it's going to solve. Now, if you look at the whole world, it's many problems AI could solve if used right in quantum computing whenever they both combine in the next 10 years. My book, The Future of Wealth, talks about this. You can get it on Amazon. And it's also what's going to happen is also a lot of investment opportunities if you understand what's happening. That's why the book is so important. It comes out in October. You can pre-order it on Amazon. The Future of Wealth. It's on Amazon. So one big problem we have is hunger all over the world. If you ever worked at a fast food place, every fast food place throws a bunch of food out. And one person will say, that's because, of greed or capitalism or whatever that problem is. They throw the food out. People in Africa are hungry. Why can't we just send the food over there? What are the problems with that? One is that by the time the food gets over there, it's worthless. Two is that we find it hard to predict how much food you're going to need that day, so you have to overproduce. And three, it's better for them to overproduce and have enough food and throw away the leftovers, and they still make a profit. That's capitalism. Remember, capitalism is only a way to organize labor. That's all it is. It's not really, that's all it is. Communism is another way, socialism is another way. It's a way that we can organize everybody to move toward similar goals, really. So how can we get that food from here at the back of a McDonald's to Africa without it spoiling in time, being able to predict where the food's going? Well, that problem is very complex, extraordinarily complex, that no computer can solve it today, and no human can solve it, because the amount of variables it takes to process, to predict the food that's going to be wasted somewhere, the logistics needed to move that food to another part of the planet before it spoils, to handle somebody else's hunger needs, is ridiculously complex. That's the reason why we haven't solved it, because the human brains, even collective human brains, can't understand that many variables. It's too many. But computers can, and quantum computers can, and AI can eventually. So AI could step in and solve that problem within the next 10, 15 years, be able to predict the food that's going to be wasted, maybe buy it cheaper or whatever from McDonald's, send it across the world before it spoils, and then feed the people with the leftovers. Now, I do believe that the problems that AI and quantum computing and other advanced technologies can solve is worth what we're going through right now. It is worth some job loss. It is worth some uncertainty. It is worth some revolution, you should say, or people forced to find new jobs. I believe that what we're going through is so significant that it is worth it, and that's just how it is. I think if we go from where we are today to the other side of it, if capitalism, corporate greed doesn't get in the way, we can be in let's go back to the Industrial Revolution. We're all better off because of the Industrial Revolution. All of us are. We got cars, we got cheap electronics. Maybe some things happened, some people lost jobs, but at the end of it, we're better off. We're all better off because of the computing revolution in the 70s and 80s. Now we'll all be better off in AI after it's over. But for the next 10 years, maybe turbulent, maybe some problems. but eventually we will be better off. And along that path, there's investment opportunities. That's why it's so important to read the book. That's why it's so important to pay attention. So yeah, Hold It has a good point. Could we start with our own hungry citizens first? Yeah, we can start with our own hungry citizens. That's all right. I was just giving a global example, but yeah, feed the people here first. Now, the power triad, even if we're going to crash, it remains intact. Compute, data, and energy are still the foundations of the intelligent age, regardless of what happens to individual stocks. The prices may be correct, but the prices may be correcting, but the demand for chips, data, infrastructure, electricity, it will continue to expand no matter what. Because the problems and what AI is doing is so great that it will be a constant progression towards that. And remember, some people sit on the sidelines and say, well, I hate AI. I don't want, but you got two choices. You can wither and die, or you can learn AI. That's actually a good rhyme. You can wither and die, or you can learn AI. I made that up on the fly. I should be a rapper. I'm just joking. But what I'm saying by that is saying that AI is going to happen regardless. No matter what you do, no matter what you say, how much you resist it, how much you protest outside, it's going to happen no matter what. So you have to learn, and you have to learn AI for one. You have to learn to invest along this progression. If you don't, on the other side, you may be lost forever. The infrastructure that AI is building will outlast all of this hype. Many AI applications are overvalued startups. A lot of them are going to disappear, but there's still an infrastructure need. Energy could be the biggest opportunity. Capital is poured into AI compute faster than it's flowed into energy. I mean, that's what my Power Triad says, that the system, the three parts of the Power Triad has to be balanced. Data centers don't run on hype, they run on electricity. There's a growing gap between electricity demand and available infrastructure, and it's going to create an asymmetric opportunity. And here's the part nobody else is talking about on YouTube, and I want to go into a stock that I believe could do extraordinarily well in these conditions, especially with the drawback. Before we do that, I want you guys to listen to an ad. Most investors know opportunities are happening, but they still don't know what to buy, when to get in, or when to take profits. Inside the CNC group, we give you clear buy and sell signals, price targets, market updates, and the exact assets we're watching across stocks, crypto, AI, and emerging technology. But CNC is more than information. It's a community of investors building wealth together, with members earning our $100,000 awards, millionaire awards, and more than 40 members reaching millionaire status. Stop guessing with your money and start making informed moves with a community that has real results. Join the CNC group today. So, also, I want to shout out to my sponsor, I Trust Capital. Most investors are making one critical mistake. They spend all their time trying to figure out what to buy, but nobody's thinking about taxes or where to hold it. Building wealth isn't just about returns. It's about taxes, security, custody, and protecting what you've built. That's one of the reasons why I partner with I Trust Capital. Whether you're looking for a crypto IRA with potential tax advantages, a secure premium custody account, or a treasury account for your business or trust, I Trust Capital is focused on helping investors build and protect wealth for the long term. If you like more, you'd like to learn more, the I Trust Capital link is in my bio. Now, I want to talk about this AI energy problem, and it may be an opportunity. Now, the AI bubble could burst for what they consider burst, and I don't think it's a real burst, but that's what the media will push. And if you go back to 2008, now we talked about this last week, is the media pushes this stuff for whatever reason. They will cause a bubble to happen and cause it to what they consider fall, so they maybe can profit from it. I don't know, but a lot of this is just self-induced. I mean, like AI really is really. Remember, one of the what was it? The last earnings call we had with a major company, I forget which one it was, but they actually had positive earnings, and people panicked because the earnings wasn't enough. Now, how many times do we see this? Is that not the, remember, the dot-com boom started when companies' earnings was so low, far below expectations that people panicked. This bubble is bursting because the earnings aren't enough. People are predicting maybe in the future, they're spending too much on money, but the earnings and the revenue and all of it's okay. It's because this is an immediate induced correction for whatever reason. I don't know what it is. But the first lesson we need to learn here is that AI correction in the technology is not dead. The second lesson is even more important. Corrections don't move excess, they actually create opportunity. One of the biggest opportunities may be overlooked that may be overlooked in this AI build out is energy. And I've been talking about this for a while. Called out Oklo at $6. The correction, what we're seeing right now, it did not. What's happened is it's not going to change AI's energy demand. AI stocks could be falling, but regardless, data centers going to need power. Chips still need electricity. AI models need ever increasing energy. Every new generation of chips and models. The correction changed stock prices, but it did not change physics. You cannot turn data into intelligence without electricity. It's impossible. Capital has focused on compute for years. Investors have poured billions of dollars into AI chips and compute, even with the new Chinese chips and models that are coming out. We're focused a lot on the chips. We haven't focused enough on energy. I think that right now Oklo is around, let me see what the price is. Because I was in Canada all week. I didn't even look at the stocks much. Let me see, what was it? I think the last time I checked was like 40 something. Oklo is 42. Yeah, 40.20. So right now, Oklo is 40.20. It got caught up in the thing. We called it out at 6, so we're still up 5.5 times. But these are buying points, especially with SpaceX too, and I will talk about that later too. I think SpaceX is getting close to. We said around 100. It's time to start buying, and I still believe that. So with Oklo, for example, I think Oklo is a great buying opportunity now because governments and technology companies are increasingly investing in AI, advanced energy solutions, which is mostly nuclear, because they realize already that AI cannot scale without reliable baseload power. The next phase of the AI race isn't just about faster chips. It's going to be about powering those chips with cheap, reliable electricity. That's what happens after correction. Every major tech boom begins by rewarding the obvious winners. After the correction, capital flows deeper into the supply chain, like my Power Triad has predicted, toward the infrastructure that makes the entire ecosystem possible. You always, what we talk about in the CNC, what we talk about with the Power Triad is you follow the bottlenecks. You don't follow the hype. You have to be ahead of the crowd. The biggest forces are made by solving the constraints. One of AI's biggest constraints is electricity. That's why I'm so bullish on Oklo, even though it's taking big losses. The AI correction didn't weaken my conviction, it just refined it. If AI adoption continues accelerating, the next wave of winners may not be the companies building the smartest models, but it's going to be the companies that made those models possible, and that's energy. Let's see if we got any questions. I appreciate you, Stuart. Now, I need some likes here. I don't have that many likes. How many likes I got? I can't even see it, but I got 600 people in here today, but only a few likes, so I need some more likes. Let me see. Let's see if I can see the likes how many likes I have. Oh yeah, at the Future Wealth Conference in December, we're going to announce two projects that I'm launching. So you should show up. It would be beneficial if you showed up live. We're going to launch a fund that day too, and also another project. So you got to be there to get in the fund. So if I were you, I would show up, especially with the downturn. So right now, how many people we have in here tonight? Let me see. Yeah, SMR is a good stock too. I just like Oklo a little better, but I still believe I think SMR is good too. I just didn't mention it tonight. Yeah, right now we got 555 people in here, but only 164 likes. So I need you guys to like the video. If you haven't done so, please subscribe to the channel. Also, send the video to some friends. Let's try to get it to 1,000. I used to have like 2,000 people in here, but as the market has become more and more uncertain, people have dropped off. But I want to talk about that for a second, and we're going to move into talking about the conference. But this is the reason why people are broke. I'm just going to say it, man. When you get older, you just start saying stuff. 45 now, 40. So I just started saying stuff. I've known a lot of people with the potential to make a lot of money, but they give up soon as anything happens, any setback, any kind of uncomfortability. That's the I've seen people, just stay consistent and keep pushing and make a lot of money. I've seen people who are smart and just give up too quickly. I don't understand why people quit. Maybe I'm not built like that. I'm just not built to give up. I'll keep coming back and back and back. Like I told somebody at the conference last week, I said, they were talking about it. It was a young lady. She was talking about something. She said, well, maybe what I'm doing only has a 1% chance of success. Should I even do it? I said, yeah, you should do it 100 times. If you have to walk into a room, you have to present what you're doing to somebody. And in your mind, you've calculated you have a 1% chance. Then do it 100 times, and now you got a close to 100% chance. It doesn't really work like that, but kinda, more or less. The more you do it, the odds go up. But if you do it 100 times, you almost guaranteed success. Every time is 100 times. Eventually, you're going to be successful. You just got to be relentless, and you can't give up. Even with investing, it's the same way. When it's down, you double down in. You learn more. You learn more. What did I make mistakes? What could I have done better? What are the new bottlenecks? What are the new stocks I could find? What are the new conferences I can go? I told you I made more money in my life in the downturns when people have looked away, because that's the learning period. And we also ask people in the CNC. There's people who were in the CNC early, went on to make a lot of money either in business or in investment, because they understood the power of the downturn in business and also in investing and in life in general. Is that the downtime? If we do go into a recession, the good news is that all the chaos and stuff is gone. So now you're down to the bare roots. Now, if you go to conferences, the only people there, they're not selling hype, they're not selling products. Those are the real believers and people who understand the technology. Those are the people that's in the room. So now you have a reduced a room that's not hyped up, and you get access to the people who are really, truly connected to what you're looking at. And then when it comes back, then all the hype comes back, you're ahead of them. You don't have to, like, let's say, for example, there's a person you really want to meet at this Future Wealth Conference in December. And instead of having 10,000 people there, we only got 2,000 because it may be a recession. Now you can go up to the people, talk to them, whatever, get their information, because there's only nobody around them. If you wait till the hype time comes, there's 10,000 people running at them. They don't have time to even talk to you. You just one of the people. That's why it's so important to build in the downtimes, your investment portfolio, your entrepreneurial pursuits. Everything you do, you have to build through the downtime. And most people don't have the dopamine, I guess. I don't know what the term is, but let's say most people want dopamine rushes in what they do. That's the only thing that motivates them. So if there's no movement, there's no quick money to be made, there's no hype, they just go off to something else, almost like an ant following a scent trail. They don't have any mind of their own. They just follow whatever the trail is. And that's what causes them to be not successful, because they spend their whole lives like this. The like button is not there. That's crazy. I don't believe that, man. I think maybe for you, is anybody else having a problem where they don't see the like button? Let me see. I see the like button right here, 2019. I guess he doesn't see it. Maybe he got a weird version, a Temu version of, like my kids call everything, a Temu version of YouTube. All right, let's move on. Most people are tired of paying for conferences that recycle the same speakers, the same predictions and information they already heard online. Future wealth is different. The market is uncertain, confidence is fading, and most people are pulling back. But the next generation of wealth will be built by those positioning themselves before the recovery begins. This December in Miami, investors, founders, executives, and market leaders will come together for 3 days of real strategies, major announcements, surprise guests, high-value relationships, and opportunities you will not hear from the sidelines. This is not another conference. It could be where your next investment, partnership, or breakthrough begins. Tickets start at $297 and prices rise. The U.S. government just borrowed $500 billion. So the Future Wealth Conference is a little different. Somebody will put the I'll put this in the chat so you can sign up if you want to. The average conference talks about how to make money. Here's how you trade stocks. Here's how much money you can make in options. Yeah, that's good and fine, but we want to talk about what's coming next. And we all not just want to talk about it, we want to have discussions around it. We want to have panels. What are the biggest in precious metal investments? What do you see coming over next year? We want people that are not just influencers, we want people who are deeply connected to these subjects so that we can get some insight into what's coming next year or in the next 5 years or even the next 10 years. That's how you get ahead. You have to understand how the world is changing. Remember, the Future Wealth Conference is not going to try to predict so much. We're going to try to have different paths, right? Let's say, for example, you go to a panel and somebody says this is going to happen. You go to another one, somebody says this is going to happen. You go to another. So now you've thought these 3 scenarios out. So if one of those scenarios starts to happen, you've already thought it through. So you know what the first, second, third order of the cause and effect is going to be so you can position yourself. If you never think about these things, you never know what's happening. You're just always in this chaos soup, but you don't even understand what's going on. And we could be in the middle of a recession coming. I mean, we could be preparing for one. So let's talk a little bit about what's coming and how to position. Now, I want to shift gears a little bit because AI correction is part of a bigger story. Now, Jamie Dimon has reportedly warned about America's debt. When the CEO of JP Morgan says the warning lights are flashing, people need to start paying attention. History shows this is not a new problem. I love making parallels to the Roman Empire because the Roman Empire did not collapse overnight because of one battle. It spent beyond its means, borrowed heavily, and reduced the value of its currency by mixing cheaper metal into its coins, called debasing. It sounds kind of familiar, right? They relied more on debt than productivity, and one big thing is they watched the gap between the rich and the poor grow ever larger. Over time, confidence in the system collapsed. Now, I'm not saying America is Rome. I'm saying history often copies, rhymes, and repeats. When countries start to pile up debt, weaken their own currency, consume more than they produce, the risk starts to grow. The question is not whether the change is coming. The question is, if a huge recession starts, are you positioned before it arrives? Now, I want to say something. The U.S. government is near broke. For the last few years, especially since COVID, the U.S. has spent far more money than it's brought in. Remember, it was one point after COVID that a third of all money in circulation was printed within 3 months. Like it was 2020, it was 3 months where the government printed off a ridiculous amount of money, put it into the economy, and it was a third of all circulating currency. Now, where'd that come from? Now, that's why we had crazy inflation for the last 3 years. Then we finally got it in check. Now the U.S. has borrowed so much money, they're paying an enormous interest on their debt, leaving less money for everything else. $40 trillion is the trap. The national debt has went over $40 trillion for the first time ever. So every 100 days, remember, just think about this. Remember, interest on debt accelerates. It gets worse and worse. Every 100 days, our interest grows by $1 trillion. That means more tax dollars go towards debt than anything else. So the money they take from you, most of it's going towards debt now. This is not a normal recession that's forming. Most recessions are temporary slowdowns. It's different because the problem is the economy is running out of steam. Now, what could happen to your money if this happens? When governments can't keep up debt, they often print more money, which actually accelerates inflation and makes the problem worse, but temporarily it can help it. So that makes every dollar you own buy less, quietly reducing your purchasing power through inflation. Now, here's what our opportunity is that if something like this does happen, people move away from money into hard assets. Gold, crypto, Bitcoin. Bitcoin is actually doing well under the circumstances. Let me see. We got anything in the tap the X? This guy. I don't know if that's bad or good. Legacy tier strategies. XRP vote. We're going to talk about that in a little bit. But please like the video if you haven't done so already. And please subscribe to the channel. So remember, the economy is not, we're not going to head into a bad quarter all of a sudden. We are heading into it. We're going to head into a structural change. The economy is going to rewrite which assets matter and which ones lose value over time. Remember, every recession or every drawback we have increases the gap between the rich and poor. The Fed creates money from nothing and charges the issue on that money. Who earns the interest? And still spending on a pointless war. Yep, exactly. So remember, if we go into a recession, there's a good chance we can go into a complete structural rewrite. And that's scary. And what people don't realize is that these types of things make the rich and the poor gap even bigger. And I'm going to tell you why. And this is why it's so important to have assets. Because asset prices normally in situations like this go up. The more money you print, assets, look at what happened in COVID. Look at home crisis before COVID and after COVID. Let's just use that as a baseline asset, just something that everybody understands. House prices were about half of where they are in 2019 to where they almost doubled in the last 6 years, doubled. And that's because that normally when they print money, that's what happens. You got wage earners, people who make money at jobs. Now, your job has you on a 2-3% inflation raise. They're not going to raise that to 11%. What inflation probably really is, they're going to say it's 3%. Jobs, the income you get from a job does not go up fast to compete with inflation. But you know what does? Is asset prices. So you make $50,000, $60,000 a year in 2019. You're not making $120,000 a day. Now I want to ask, is anybody stayed at? I want to say yes or no in the chat. Has anybody had a job in 2019 and now they make double without getting a promotion or anything else? Just the job felt sorry for you and gave you more money to make up for inflation. No, that doesn't happen. If it happened, maybe I don't know. Somebody put it in the comments. But I doubt that does not happen. So you may have made 60 in 2019. Now you make 75, maybe even 80. But all asset prices have doubled since then. So now you can't buy a house with that money. You could have in 2018, 19, you can't today. But that's what causes the gap between the rich and poor, is that your money is stuck. The asset prices, the gold prices, the silver prices, the stock prices, the house price, the land prices have all went up a lot. So the rich have not lost any debt because most of their money's kept in assets, have not lost anything. You have been separated from the rich man even farther since COVID because they printed up all that money. And printed money goes into assets. So it drives the price of assets up, but it keeps your salary the same. That's why. And the thing about it is that once, if you look back in history, once societies get to this point, it doesn't stop. It just keeps going. So eventually America's going to fall, I think. It could be 100 years. It could be 50. I don't know. But what will happen in our lifetime is that inflation will get out of control. At some point, we may be able to fix it temporarily. We may not. But the people who hold assets are the people who will be safe. The people who don't are going to be bad. That's why it's so important to get your hands on assets, get your children thinking like that. Now, a lot of the younger people are checking out saying they don't want assets. They just want to spend all their money. Make sure your kids aren't like that. Make sure your kids understand they need to have assets. They need to have hard assets to get through what could potentially come, regardless of what they feel. And also, you have to start building your assets for your children's future. If you don't, you're going to regret it. And that the assets are more than just hard. It's also education. Somebody else I was talking to at the conference, and we're talking about generational wealth. And I want to touch on this before we finish off this section on recessions. One of the biggest trends of 2020, 2021, everybody's talking about generational wealth, but few people really understand what it is. What most people think about generational wealth is I make a bunch of money and I give it to my kids. And then my kids have the money and they give it to their kids. Then their kids have the money, give it to their kids. That can't happen like that, because the The family tree is a reverse exponential tree. And what I mean by that is that it actually grows exponentially, I should say. Yeah, the tree grows exponentially. And what I mean by that is that I'm a person. I have a mate. We have 2 kids. So let's say I made all the money. Now it's 4 people that has to split that money. I give it to my kids and I die. Now two people have my money. So my money has already been split in half. So, and remember, inflation is attacking it. Inflation is attacking the money. And now they each have 2 kids. Now it's let me see. Now it's 4 people. Plus, if they're still alive, 6 people that have my money. Now, if let's say they die off, now you got 4 kids, and they have 4 kids. Now you got 2, 4, 6, 8. You got 12 people that all living off the money I had, 50, 60 years ago. And as the tree gets bigger and bigger. Now, there comes a point when your money ain't gonna last. It eventually just goes, it's not enough to last because too many people, somebody in that chain is gonna go nuts, spend all the money, get hooked on drugs, something's gonna happen. And then that's why the statistic is by the 3rd generation, generational wealth is gone. Because you can't just pass down money. That's half of it. You have to pass down financial literacy and understanding. If you don't pass that down with the money across generations, you won't have the money will be gone by the 3rd generation. So the people who understand all of this and position ahead of it are the people who find out late are the ones who are going to be wondering what happened to their money. And you don't have to predict all of this the exact day that we go into a recession. You need to understand the right assets to have before the crowd figures it out. I told you there's a specific date, less than 72 hours from now, that connects directly to everything we just talked about. So one way you can learn is by joining the CNC. But so I'm going to let you guys see this video one last time. Most investors know opportunities are happening, but they still don't know what to buy, when to get in, or when to take profits. Inside the CNC group, we give you clear buy and sell signals, price targets, market updates, and the exact assets we're watching across stocks, crypto, AI, and emerging technology. But CNC is more than information. It's a community of investors building wealth together, with members earning our $100,000 awards, millionaire awards, and more than 40 members reaching millionaire status. Stop guessing with your money and start making informed moves with a community that has real results. Join the CNC group today. So make sure you go to jointhecnc.com. I'm going to put it in the chat down here. I'm sorry, into the caption in the video, so you can click it down there. I'm also going to put it in the chat. So last thing I want to talk about is XRP and the Clarity Act. And the 2 dates that we talked about. The 27th is coming. But before we wrap it up, there's one event that you need to watch is August 7th. The Senate is expected to vote on the Clarity Act, a bill that could finally define which crypto assets and commodities are securities. That legal uncertainty has been one of the biggest reasons that large institutions have stayed on the sidelines. We just talked about a weakening dollar, a growing debt problem, market volatility, but this vote could become one of the biggest catalysts for digital assets. Now, here's why, because finally crypto gets rules. For years, crypto has been stuck in a legal loophole. The Clarity Act could finally mean that the rules, this could be finally the set of rules that the institutions have been waiting for. Now, this time is different. I said a lot, but I do think that unlike past crypto bills, this one has broad political support and comes with a much more crypto-friendly environment in Washington. I think they're going to pass it this year. Maybe they won't. I should say I hope they're going to pass it. If I had to lean either way, I would say 55% they're going to pass it. 45% they won't. And I really do think the institutions need clarity. Finally, I mean, crypto has been in this weird limbo for years. And the big investors, they don't like this. They don't like uncertainty. Now, if the rules become clear, it could remove one of the biggest variables preventing institutional money from entering XRP and the greater market. Remember, everything is conversion. If you look at what's happening right now, we got record debt, pressure on the dollar, volatility in stocks, crypto getting regulatory clarity. These trends could actually reinforce each other. Crypto could be a safe haven away from what's happening in the market, or a safe haven against fears of recession. with the Clarity Act passing. And XRP does matter greatly because Ripple is focused on moving money across borders faster and cheaper. They've also added in AI agents. If regulations become clearer, supporters could finally get the day that they've been waiting for, and adoption could accelerate. So what stocks to keep forever? We talk about that in the CNC. One of them is probably NVIDIA. If you're new to the video, please like the video. We got about 600 people in here tonight, so like the video. If you haven't done so, subscribe to the channel. The stocks in the Power Triad. Now, I want to talk about, we're going to talk about, so in the CNC, which is tomorrow, 8 o'clock, we're going to talk about the Power Triad strategy. And this is a strategy I've been developing over a couple of weeks on what stocks to buy. If somebody wants a simple strategy, you buy how to evaluate stocks in the Power Triad, how to buy one for each sector, and also adding in some index funds to reduce volatility. And that's what we're going to talk about tomorrow on the CNC. Also, in my private group, the CNC, we're going to, after we finish our 90-day wealth framework, the next thing we're going to do is we're going to teach people how to use AI in your trading, how to create AI agents, how to evaluate stocks with AI, how to evaluate financial models with AI. We're going to talk about all of this so that people can start creating their own financial models, financial agents to attach to Robinhood, to auto trade, stuff like that. So we're going to talk about, that's what we're going to talk about next in the CNC. So if you're interested, please go to jointhecnc.com, or you can send me a DM on Instagram or any other social media platform, and I'll send you the link. So we're going to end this with some questions. Let you guys ask some questions. We're going to let you go. Are you just a dude with an opinion, or do you have qualifications? No, I'm just a dude, man. I just like talking about it. Come on, man. What do you think? I mean, I can see that point, because there are some people out there that are just talking. But I don't want to go into all my qualifications right now. But I would just say I am qualified to talk about what I'm talking about. Probably more qualified than 99% of influencers. So, I mean, people in the comments will say it. I mean, if you guys will at least put some verification that I'm qualified in there. I shouldn't have got mad, because I assume that I can see your point, because there's a bunch of people on there just talking. So I can see your point. I'm not going to get mad. I'm just saying that I can see your point, and you should be checking, actually, because there's some idiots out here talking about finance and stocks. Now, actually, it's a lot of idiots. Since the rise of ChatGPT, and all they got to do is print up scripts and talk. I mean, the understanding stocks takes a long time. I've been doing this for 20 years. It's not easy. And a lot of people, it's Dunning-Kruger effect. You know, that's a popular framework right now, is that people who just learned something think they're geniuses. I had a guy that used to work for me, and he learned about options and stuff in about 3 weeks. His ego got so big, he exploded. And now he's finished. He's there. He had a lot of potential. He could have made millions of dollars, but his ego got out of line. I mean, it got so big. I've never seen an ego expand that fast. But it was because he learned something powerful early. He got a lot of support for learning this thing. And his ego and Dunning-Kruger principle, he thought he was a genius. His head blew up so big it exploded. And he lost everything. So there's nothing you could do about somebody like that. I really tried to help, but unfortunately it didn't work. We got some new analysts in there to replace him. It was a couple of years ago, and we're still moving ahead. But that's what happens sometimes, is that a lot of people out there are going through the same thing, is that they learn something for a couple of weeks. They start doing trading class. It takes a lot of work to know all the nuances. And I give you like basketball. I can teach a person to dribble a basketball in a week. I can teach somebody to have a good shot in 2 weeks. I can get a kid, and you let me train him for 2 weeks. I used to play pro basketball too, and I haven't played in a while, but I used to play. I can teach a kid to have a perfect jump shot. Now, he may not make it, but he's going to be mechanically good in 2 weeks and be able to dribble the ball mechanically good. But to master that skill for that child will take 10 to 15 years. Sometimes trading looks easy on the surface, but to master that skill, it will take you years. Yeah, I'll put the QR code next time. That's a good point, the Tech One. I'll put a QR code somewhere. You got them heel figure shoes. But yeah, to actually learn something takes years to get good at it. And I'm not saying this to like deter anybody because you can, let's say I teach them how to drill a basketball and shoot. Yeah, they can go play pickup games. They can actually be successful, but always in the back of your head, no, it's man, it's better people out here than me. And that keeps you humble and that keeps you learning and advancing. When you get to the, boy, I know everything and you throw everything out, that's when you make the biggest mistakes. You have to understand that you don't know everything. Now you can be a what do you call outlier, and you can actually get good at trading in a couple of months. But you have to stay humble and understand that I don't know everything, and then you'll be great. You can never let your ego overtake you, but then tell because your ego always tries to tell you you're great, you're the best person ever. You don't need this other person. You don't need nobody. You can quit your job. You just made 5,000 in a day. What are you letting this dude talk to you? You be in the line at the grocery store, and your ego will tell you, you let this dude step in front of you? You just made $10,000 in NVIDIA on options. You need to tell this, man, you if you let your ego talk to you, you'll go around saying crap. And everybody has seen people, you've seen people like this in your life. Like somebody has a win or something, they'll change completely because their ego's in their ear telling them, well, you don't need this girl. Go ahead and break up with your girl. You made 20,000 in crypto over the last 2 weeks. I mean, and then pretty soon your head will get so big that you won't even be able to survive. And that's the key. I've been doing this for 20 years, and I keep my. If anybody's met me in person, you know I'm a humble person. I tried my best to understand I don't know everything, and everybody. Somebody could come up to me and say, "Hey, I want to help you out with something." Even a child, even a homeless man, I'm going to listen because a child or a homeless man may have an insight that maybe you didn't see. And actually, sometimes they often have insights that you didn't see. Not sometimes, maybe really often. Children see things clearly. They're unencumbered by biases. And probably a lot of homeless people too. I'm better than this homeless man. I don't have to listen to him. Yeah, you may need to listen to this dude. He may know something you don't know. So, with that being said, we got the debt problem, AI volatility, crypto regulation, but it's all becoming part of the same bigger story. The financial system is definitely changing. I'm not telling you what to buy, I'm telling you what to watch. And August 7th could be one of the most important dates for crypto this year. That strategy